everybody, Kenny Bonus here with Bonus Accounting, and on today's episode we're going to be going over the stimulus bill that was passed at the end of December 2020. There was a lot of new changes that affect businesses and individuals, so we're going to try to break down the highlights when it relates to each of those. There was a lot of great things that happened for businesses in relation to the stimulus bill to help with the pandemic and COVID relief. And then also for individuals, this was a much awaited stimulus bill and there was over 5,000 pages. So we recently took some training courses on what was included on that, and we're going to try to break it down in a way that you might be able to find helpful. So if you have any questions on any of the following information, feel free to reach out to us or do your own research, but we're definitely happy to help any of our clients and anybody who's interested in learning more about the bill. So starting off, a lot of the bill relates to businesses and how the stimulus bill might be able to help businesses. So the main benefits relating to this new stimulus bill in relation to businesses is the opening back up of the Paycheck Protection Program, the PPP. That's how we'll refer to it for the rest of the video today. If you've already received the PPP during the first round, you're potentially able to get a second round of funding through the PPP. You do have to be an eligible company in order to do that. That involves having a decrease in gross revenues when you compare gross revenues in 2020 compared to the prior year's quarter in 2019. So they do a comparison between quarters from 2020 to 2019. And if you had a 25% reduction in gross revenues in any one of the 4 quarters in 2020 as compared to the respective one in 2019, you're able to be potentially eligible to receive a second round of PPP funding. And that is definitely huge. And this one involves that decrease to determine whether or not the business is deserving of it and really has been impacted by the coronavirus in a negative way. So watch for that. That's the big advice I would refer and tell a lot of my clients is check to see if you're eligible. And if you are, talk with your banker, talk with your accountant. We're always happy to help assist with any of that information as well. Another thing that happened is that if you didn't already apply for the PPP, they've opened it back up until March 31st, 2021. So if you didn't get a chance to apply for the PPP the first time and you missed the window and it was closed, you can still find some time to apply without those reduction of gross revenues rules applying. Additionally, if you were a new business in 2020 and you weren't able to get a first round of PPP funding, there's an opportunity for you to apply this time around and get some PPP funding. The PPP is calculated and determined using the average monthly payroll whenever you look at either 2019 or 2020 multiplied by 2.5, and then that amount would be your potential PPP funding amount. If you're a restaurant and have a certain NAICS code, you can potentially get 3.5 times the average monthly payroll. So watch for that. If you're a restaurant, this could be especially beneficial to you. Another big change that has happened with this new stimulus bill is the allowance to deduct the expenses that were paid for using PPP funds. Originally, people and businesses weren't going to be taxed on the PPP income, but they weren't going to be allowed to use the deductions that they spent the PPP funds on. Now, with this new stimulus bill, the businesses are not missing out on those deductions that they spent using PPP funds. That's a huge tax savings for a lot of people because otherwise they would have effectively been taxed on this money. So this was a great way for the government to identify who had received the PPP, who had been forgiven on it, and how to help when it comes to tax time for these businesses. Watch for that one. Work with your accountant on it to make sure that you're getting all the proper deductions. We're happy to answer any questions on that. Another key item from the stimulus bill is that if you receive the PPP and an EIDL loan, that portion of the EIDL does not make the PPP taxable. So definitely a good benefit there. So this new stimulus bill helped things get a little bit more lenient in general, and now borrowers can choose if they want to use an 8-week period or a 24-week period to begin the forgiveness of their loan and use it on appropriate expenses. So previously you were either locked into 8 weeks or 24 weeks, but now you get to choose which time period and time frame you want to use for the forgiveness of the PPP loan. It starts to get a little bit more detailed with that. We're happy to answer any specific questions that you have in relation to the PPP loan. And originally, when the PPP came out, you were only allowed to spend it on certain types of expenses. You had to make sure it was either in payroll, health benefits, mortgage interest, rent, utilities, and interest. So now, with the new stimulus bill from December 2020, it's actually expanded that to go and cover a lot of different expenses. So I'm going to read off some of the expenses that are now allowed on top of what was already allowed during the first PPP. So now these expenses cover operations expense, property damage costs, supplier costs, worker protection, and then these expenses have been greatly expanded to increase the range of what might be considered eligible expenses and therefore forgivable. So there's a lot of gray with some of those expense categories, so you're going to want to talk specifically with your bank and make sure that you read the details to make sure that the funds are being used on appropriate expenses. The new stimulus bill further allows any loans, PPP loans, that were given for under $150,000 to have the Simplified Forgiveness application through the SBA. So that's going to help out a lot when it comes to the administration of the forgiveness, and should make it a lot easier for many people that receive the loans if the loan was under $150,000.